So this video is going to go into how you can get funding for your business without a Paydex score. Paydex score is not necessary to actually get business credit cards or business loans, okay? Really, a Paydex is meant for vendor credit. In section 4, I build it, I break it down, right? I tell you how to build one and also break it down. Again, Paydex isn't used for business credit. A lot of banks do not require that, and they don't even ask for it on their applications, okay? And in the video, I'll break it down as well, and you'll start to learn. So Paydex primarily looks at how you're handling your business invoices, right? How you're paying your invoices. FICO shows how you actually handle credit, okay? So banks trust your personal credit history more actually than the actual business score because again, it's just vendor credit a lot of the times and they don't really care about that, like how you're paying your suppliers. So basically the 680 FICO is what gets you started, and that's how you can get 50 to 250,000 in funding. And these are what's required in that actual profile typically. So at least 2 years of total credit history, less than 10% utilization. Usually 20% is the max. Once you do more than 25%, your chances of funding decrease. Okay. Individual credit cards should also follow this rule. No card should exceed more than 20% utilization. No negative items, at least 3 open revolving credit cards with limits between five to $10,000, and one installment loan, whether that be the auto loan, personal loan, or something similar. All need to be primary accounts, not just authorized users. No more than 2 inquiries per bureau. If you have more, you should get them removed. Now, the authorized users, a note on that, a lot of lenders know that people are adding them to get funding. And also on top of that, once you get added onto the card, like let's say it's like a friend and you get added onto their Wells Fargo card, Wells Fargo reports you as an authorized user anyways, so they can see that you're an authorized user, right? And and basically they'll just go ahead and rescore you and remove those accounts, and it doesn't count towards your credit, right? So like you can be considered a 750, but because you have the authorized users, once they remove them, you could be a lot lower than that, right? These are automatic declines, so anything below a 680, no credit history or a thin profile, like less than 2 years worth of history, right? Like it's your first credit card type deal. Only authorized users accounts, no primaries, recent charge-offs, collections, repos, or bankruptcies, and then high utilization, right? Over like 50%, but basically high utilization. These ones here are borderline profiles that could get approved. Basically, you're a 680 with a very strong profile, right? With strong payment history, but your utilization is between 10 to 50%, right? Especially if the balances are small, like 2,000 used on a $5,000 card. So, I mean, you can just pay that down, right? And also the lenders can kind of see the difference compared to like, I don't know, like having $80,000 used on a $100,000 card. That's a completely different amount, right? And so while it looks bad, the amounts, the true amounts, I mean, it's small. You see what I'm saying? So there's a big difference. Now, another thing, even though I say no negative marks are up here, what I'm saying though is like old negative items with 3+ years old. Like if they're 3 years old or 2 to 3 years old, right? The older they are, the less impact. Okay. I've seen people with 750s or even 800 scores with collections, but because they have such strong payment history, like a mortgage or they may have two paid off mortgages, it doesn't really affect them and they can still get funding, right? So that's the exception. Is it like really this here? Because I've seen a lot of different types of credit where anyone else, like for whatever, because they don't have the history, they generally would have a lower score, but because the client has that much of history, it doesn't affect them. Like I said, they have a mortgage, paid off autos, all kinds of things, right? And then this is just my repeat on the authorized users, just my note on the authorized users. Generally, these scores can get you these amounts. Mid tier 75 to 100. Anything more than a 750, you're looking at 150 to 250. 680 to like 700, 25 to 75, right? This is just like to give you an idea, right? At the end of the day, what's actually in your credit profile determines all that. So really, and that's what I'm saying here is like not to have good credit, but a fundable profile, right? Something that can get the lenders confident in you. So the more age and the different types of account, the better. Okay. So at the end of the day, this is what's going to help you the most. Okay. Now, when it comes to, well, I have the score, how do I know what I can apply for? Well, if you're under 2 years old or you're a startup, right, then business credit cards is how you're going to be funding your business. They don't report to personal credit. These are the amounts you can get. Generally, 0% introductory rate, 6 to 12 months, or it may be low interest, no collateral or liens, no need to be in business for 2 years, right? And this, again, this is perfect for people that are just starting out. Now, if you're older than 2 years, well, that's when you can just start looking at the lines of credit. Now, once you determine the age, right, with the line of credit, it branches out to a couple of things. So now it's going to be whether or not you can provide the financials. So without your tax returns, bank statements, P&Ls, balance sheets, things like that, you're going to look at lower limits, 50 to 100. Once you start requesting more than 100,000, some banks are different. They may say anything more than 50,000 or 75. My point, once you request, generally 100,000 is the main pattern I've seen. Once they'll ask for financials, right? So the higher the limit, typically they'll ask for financials. But then on the upside is, because it's a higher limit, well, you get more, right? Now, one thing you got to keep in mind is the UCC liens. It's not necessarily bad to have one. Okay, I usually see some liens come into play during lower amounts. It's all dependent on the bank, right? But some places may go up to like 250 with no lien, right? It all depends on the bank, and I'll show you how to call these banks later on. But my point is that you want to watch out for this, right? And what some places do, they'll say it's an unsecured line of credit, and they don't require collateral, but they file a blanket lien, right, as a safety measure on all the business assets, right? Compared to, like, let's say, well, first let me just finish explaining that. So they file a blanket lien, okay? And then what you need to know is that the moment there's a UCC1 lien on the business, your business is capped out for funding. A lot of places are not going to take second position. So if you do end up getting a lien on the business, again, it's not a bad thing. It's not bad, right? Just know that it'll block your funding. So a lot of people, they usually save that lender for last when they're applying, okay? Now, another thing they can do is, and this is when they require collateral, is instead of it being a blanket lien, they may put it directly on a specific business asset. So whether, like, let's say you own the business property and it's paid off, they may put a lien on the actual real estate, or they may put a lien on your receivables, for example, right? Um, but generally, that's when it converts into an actual collateral based line of credit, and they secure it. And if you're going down that route, you're probably going to get a line of credit that's like $250,000 or more, right? But again, just a general blanket lien, it can come into play at any time. So you kind of want to ask them. And if you do get a lien, again, it all depends on what your goals are, what you're going for, the limits. If you do get a blanket lien, just save it for last. Okay. You're gonna have to personal guarantee these products. Okay, the non PG options just don't exist. I've only, like, really, that's mainly for large corporations that have massive finances and all this financial backing. Right? They're not. They just, we're not big enough as small business owners to be able to request something like that. You know, and if it changes, I'll be the first one to let you guys know. And if you guys ever find something, you're always welcome to email me at david@bizcreditkit.com, and I'll go ahead and update this and say that I'm wrong, right? But generally, from what I found, you always have to personally guarantee. There isn't an option where you can't personally guarantee it, right? Like, choose an option for no PG. Okay, so just remember that. And the best order to apply for business funding, a lot of times people do the business cards, then they move on to unsecured and then secured. Okay. Now, where do you find the banks? When it comes to funding, it really does depend which bank you're talking to. Now, I'm not saying that these banks aren't good, because actually some of these do offer like stated income lines of credit, but just keep in mind that they do have a lot stricter underwritings, right? You got to, like, these, they're underwriting for like the whole U.S. So with that, like because they have such a larger risk pool, they have to be a little bit more picky on who they allow, right? Because if they have too much of one profile, it could cause them to not be profitable and all this all this stuff, right? For them to just be strict. So my point, you want to stick to regional banks and credit unions. They're a lot more flexible, they're a lot more relationship based. If you get a denial, sometimes you can overturn it and actually talk to an underwriter. Not saying that you can't talk to one at Chase, but it is a lot harder for someone to actually be able to get to a Chase underwriter or a Wells Fargo underwriter, right? I've been able to talk to underwriters at regional banks when I've had issues, either with my loans or a client, right? A client has been able to reach out to them and talk. And so one thing you can do is you can start walking into some of these regional branches and just getting to know the business banker. You don't have to let them know exactly what your plans are, but you can just get it started by like opening the business checking account, right? Just stopping in, getting to introduce yourself because they are really relationship based. And sometimes they just base it off that. They really do, right? Now, these are the two main databases you can use to find a lender or these banks. They're ICBA's more community banks. And you'll see here. We'll just click on it. I'll just show you. And so yeah, you'll see a lot of it is more community based. So industrial bank. Some of these places most people have never heard of, right? And it's because they may only service like for example what is this, Washington, Maryland. So they may only service like this region here, like all this right here. Versus Chase, they do the whole 50 states, right? U.S. bank locations is also good. I personally use U.S. bank locations a lot. It just will show you the major banks. Again, I'm not saying you shouldn't call them or apply with them. You can still call them, right? But I just find better luck with like the regional ones because of the treatment. For example, let's say you're going to California or your business is in California, you live in California, San Diego, right? And here we are. It'll show you a lot of the national ones and it'll continue to show you here the major banks. But eventually you'll find like Banner Bank right here. This is a regional bank. This is actually a good bank. I think they offer stated income. But my point, you're gonna start to see these smaller ones come up. Zion's, they're regional. There's Bank of California. This one's a regional one. What else? Yeah, and it goes on. Pacific Premier, right? And so you're like, what do I ask though? What questions do I ask? Okay. Well, you want to know the type of funding, right? Whatever it is they're providing. Of course, you want to make sure that they offer what you want. Can you apply? Like this is if you're trying to fund multiple companies at one bank. You can ask if you can apply with multiple LLCs. You can, of course, they do almost always check your personal credit, but just ask them. And also, the most important question is, what personal credit bureau do you check? Right. That's really this is just to get to this question because sometimes if you just ask them this, they they uh they give like a different response. So you want to kind of like set it up with this question and then ask what personal bureau they check, what documents they require. So like as far as tax returns, balance sheet, P&Ls, how old does the business need to be when applying? Again, for the lines of credit, most require minimum 2 years. Under two, generally you're okay. You can get the business card, right? And will a UCC lien be applied? If so, what lien position? A lot of times they'll take first, right? And then this is just goes back to me saying how UCC liens can block you from funding from the future. If I have a line of credit or loan with another bank, can I still apply? This is if you do have like another line, right? Generally, if you don't have a lien, the answer is yes. But again, you want to ask them what industries you lend to, and then what's the max limit you lend for an unsecured line of credit, right? And this is just so you know before they ask for the for you to secure it. Because some places, again, that aside from like going like stated, basically the tiers are like this: 50 to 100,000 usually is stated income. Once you request over 100,000, then they're going to require the financials, but then you're mainly going to want to also look out for whether they are going to secure it or if it's going to be unsecured, right? And then anything over 250,000, a lot of times that's when it requires them to secure it specific, not just a UCC one blanket lien, but they may want to, you say like, we also want to put a lien on the cash or inventory, real estate, or some other type of collateral, right? And so typically you'll see that with the higher amounts, okay? And this is what I'm saying here, how some lenders may allow you up to apply up to an amount. So for example, 100,000 unsecured, no collateral, right? You just need strong financials, right? Or they may say like, we'll give you the 200, you need to have the financials, but then we want to go ahead and secure it with the inventory, right? So basically, this is how you find the banks, and these are the questions you want to ask. Okay. Every time you apply for a business credit or a loan, they're going to perform a hard inquiry. That isn't a bad thing. Just know that you want to know the difference between a hard and soft inquiry. Soft inquiries are okay, they don't report to your credit, but too many hard inquiries in a short period of time equals automatic denials. So you want to track which bureau each lender pulls from, right? Some pull from Experian, which is the most common. Others pull from Equifax or TransUnion. So you want to apply in a very intentional manner, spread your inquiries out across the different bureaus. Also space out the applications, right? Obviously, because generally it's 3 per bureau, right? So you don't want to shotgun applications in one single day, because again, if they see the spike in inquiries, well, high risk, 2 to 3, right? 2 to 3 per bureau for one funding round. Remove unnecessary inquiries and then avoid overlapping hard pulls, right? You don't want to go through, like, again, if you have like 5 Experian banks, well, you're probably going to get denied after the third one. So consider doing like 3 Experian, 2 TransUnion, and then like, I don't know, 3 Equifax or something like that, right? My point, you don't want to overlap too much on what bureau is being pulled. It's okay, but don't overlap a lot. And you want to be intentional with who you apply with, right? And that's the general setup for how you do the credit stacking and get everything set up. Okay. Now this is just goes into Paydex and the truth about Paydex, right? What lenders actually use Paydex. Some people, this right here is unverified. I've not met a single person that has actually gotten loans with these lenders off Paydex alone. I just hear people say that they offer it, but no one, I've not once met someone that actually does it, that has done it, right? It's just one of those things that people talk about, but it's not verified. Okay. Now, some regional banks, commercial banks, and fintech lenders also may use Paydex, but again, it's just one of those rumors. No one really knows. Like as I mentioned, Section 4, like if you follow this, you will build a Paydex and you will have like the vendor history, right? But then the issue that I've always ran into and others have ran into is that there's not we haven't been able to find lenders that actually go off of Paydex only. And if it is, it's usually like the commercial landlords. Equipment financing companies sometimes use it, but not all the time, right? Insurance companies, and usually that's about it. But like if you go to like any other bigger bank or regional bank, they usually don't check Paydex. They don't give much merit to it, right? Um, I just haven't seen it happen. I haven't seen it come up. And again, if you do end up finding a cash credit line vendor, right, that goes off Paydex, again, if you follow this, you'll build the score. I guess the missing link is finding the Paydex lender. If you find one, I mean, you're welcome to email me and let me know that I'm wrong, right? Like it's david@businesscreditkit.com. But generally, this is what Paydex is used for: negotiating better terms. You lower your upfront costs when buying supplies or inventory. Like they give you discounts or they may give you a certain status with them. And that's really what it's for, right? Um, So Paydex, it's not that it's useless. It has its advantages, but like anything with credit and finance, it really comes down to your strategy, your intent, and what you're going for, right? And really, if your intentions is to get funding, I would go with the verified path because all of this works. This actually works. This is the actual strategy that many people are using to get funding, and everything from here on out is just rumors. Okay, these are just rumors, pipe dreams, and I don't want to be again if I like there's a difference between being wrong and then just not knowing something and then claiming it's true, right? This is just me letting you guys know on where I'm at with Paydex, okay? And again, this will actually get you the funding you need. This is a quick overview of the actual like funding, right? And really where you can learn how to pull off a sequence yourself is in the bonuses here. Like this shows you how to actually pull off a funding sequence, right? And how to do it for the 0% cards or just stacking the lines of credit or doing both, okay? But this kind of gets you set up and really primed and prepared for you to kind of do like get started on your own. The only difference is that with this, like it's a full out, it's my strategy that I have, right? And these are my bank calling scripts that I use and then you can also track your lender sheets. And I think this one here is like lenders they can try to call on their own. Yeah, so again, that's if you want the extra help. But really with the core guide, this is more than enough for you to get started on your own and really be in the right direction to get funding. Like from here on out, you'll have all the questions and information that you need to get all the other missing pieces, right? Because all this does this just tells you like this is how you actually create the funding stacks, right? But using this information here, right? And then also this is how you talk to the bankers. You don't need this, right? You don't really need it. You can just go in there and talk to them yourselves. But if you need the extra help, this is basically what that is. And then I include this lender list. This is just to track your responses, by the way. Oh no, this is something else. Yeah, so those are just basically examples, right? But yeah, anyways, that's the full course. If anyone has feedback or concerns, just let me know.